Hey guys, so good to be with you. Welcome back to the Independent Investor Channel. We're coming to you from the Big Apple, New York City, New York. We're going to be talking about the Thrift Savings Plan, all right? This is a government employee-based retirement account, and I thought it prudent to put out some extremely valuable information for folks. I've seen a lot of questions come through online with a lot of active duty military specifically asking about the Thrift Savings Plan. This is one of the most important things that any active duty military member can do to secure their financial future. And a lot of what we advocate for on the Independent Investor Channel is learning how to invest on your own. But this is going to be for my fellow shipmates, my fellow military folks out there that can just benefit from a brief overview of the Thrift Savings Plan, guys, okay? So please enjoy, all right? So the Thrift Savings Plan, there's going to be just a couple ground rules that I'm going to expect that people have already got their login information. It's actually a really secure website, and they send out mailers when you receive your mailing. Sometimes it ends up with a group of bills and you don't look at it very closely. You need to log into your Thrift Savings Plan account for the very first time. You need to get your login and your password set up, guys, all right? One fact that I'm going to throw out there is that 50% of all active duty military never actually log into their account, all right? And I'm going to explain a little bit later why that's one of the biggest mistakes you can make when looking at the Thrift Savings Plan, all right? Second of all, I'm going to assume that most folks out there that are involved with the Thrift Savings Plan have a percentage of allocation that's going to the Thrift Savings Plan as a monthly withdrawal from their paycheck, okay? So those are going to be just a couple ground rules. You're going to have to get your login information set up. As painful as it may be, it actually may require you calling customer service and actually setting that stuff up, because once your account gets locked down, it's really kind of a finicky account to get into. Once you get those things set up, then you're going to have that visibility with that account, all right? But it's imperative that you get logged into that account, all right? So what is the Thrift Savings Plan, guys? The Thrift Savings Plan is a government-based, all right? It's managed by BlackRock, one of the best asset managers out there in the business, guys, all right? When I'm going to talk about the fee structure about the Thrift Savings Plan, I'm not going to get into too much detail, guys, because the fees to enter into some of these positions in these accounts are extremely low, all right? So anytime any of the branches of military are talking about you got to start your thrift, you got to start your TSP, you got to start your thrift, there's a reason for that, guys, all right? We're really trying to encourage folks. If this is the only program that you do, if you started this and you did the thrift for 4 years and you got out of active duty military, all right, or if you decided to do 20, 25, 30 years in the military and this was the only thing that you signed up for, guys, this is going to supplement why a lot of the reason why folks join the military, and that's to go after the military pension plan, right? So you're going to have your military retirement, and you should have some savings in the Thrift Savings Plan to go ahead and supplement that income, all right? So extremely important to understand, and I still talk to folks that haven't started it, you know, they encourage it really highly, even in boot camp and through boot camp. And it's something you really want to take note of. You really want to take action on this. Now, with the blended retirement coming out, and I'm going to do an entire video on the new blended retirement to take the minimum payment when you retire and drop it from a guaranteed 50% to 40%, but you actually take a matching contribution. It can be really beneficial for a lot of new folks getting into the military who don't have a choice, okay? They're going to be opted into that automatically, but there's some folks in some gray area there that are going to actually have some choice in the matter whether or not to stick with the traditional Thrift Savings Plan or to opt into the blended retirement system, okay, guys? So stay tuned. I'm going to do an entire video devoted to the blended retirement system, all right? But this is just a brief overview on the Thrift Savings Plan from my perspective, okay? Now, on the Independent Investor Channel, I offer a lot of ideas, okay? And I offer those ideas just right off the cuff, okay? They're coming right out of here, all right? There's a reason for that. I do all this stuff, okay? I am an avid investor. I am an avid participant in the Thrift Savings Plan, guys. So that's kind of why I can throw down and throw information out there to you guys, because I eat, breathe, and live this stuff, okay? So it's pretty easy for me to do it. What I find really interesting in talking to people in my active duty life at work or other active duty members that haven't started this or don't know what they need to know with regard to this. That's kind of why I'm pushing this video out there for you guys to understand just a little bit more of the Thrift Savings Plan. And I will go one further and just talk about even the folks that set up their Thrift Savings Plan. All right, a lot of times we'll start the account and we'll start this allocation. We'll start those two things, but we will never log into that account. Over 50% of people who start the TSP never log into their account, okay, guys? And that's a big problem, all right? So the 2017 annual contribution to the TSP program, whether it be a traditional IRA or they came out with the new Roth IRA option, whichever option you choose, you actually have the ability to contribute up to $18,000. All right. Now, how do we reach that allocation per year? You're going to opt to basically allocate a percentage of your paycheck, all right, every 2 weeks that goes into the Thrift Savings Plan, guys. Okay, so $18,000, what does that mean? That really means that it's a benefit to you, and for military members especially, guys, if you're not part of the military and you're just a civilian, and let's say you go to Citigroup and then to Edward Jones to open up 2 Roth IRA accounts, you're not going to be able to do that, all right? You're only allowed 1 Roth IRA account, all right? This route right here allows military to have 2, all right? If you go ahead and go with the Roth IRA option, and I'll talk about that in just a little bit, okay? So $18,000, those contributions can go into a traditional vehicle or they can go into the Roth vehicle, all right? Now, the difference in those two is that the traditional, you take the tax benefit up front off of the marginal tax rate, okay? And then you get to actually pay tax on the money later, okay, at the effective rate. And that can be really beneficial. It can actually be more beneficial than a Roth account. I advocate for the Roth account because I don't know what tax brackets are going to be like in the future, okay? So I would rather take that post-tax money now and go ahead and put that into the Roth IRA vehicle, which came out around the 2011 time frame, okay? Don't quote me on that, but I think it's 2011, 2012, and that's actually when I started. I started with the Roth IRA the moment the TSP program came out with the Roth IRA option, okay? So $18,000 of yearly contribution as a percentage of your weekly income that can go toward the TSP, okay, guys? So that's your contribution limits, all right? Now, when we talk about getting logged into these accounts and getting your accounts, what are you going to see within these accounts, okay? The TSP has actually made it very, very simple in breaking down just a handful of funds that you can select from that are going to meet your risk tolerance and your investment needs, okay? The first of which is the life cycle fund, okay? The investor that is willing to take all of their money and invest it passively into the TSP, the life cycle is a wonderful option for you, and here's why. You're going to want to, the life cycle basically allows you to take your money and put them into one basket. It puts all of your eggs into one basket. In the life cycle fund, that's actually a good thing, okay? Because that nest egg is allowed to acknowledge your age now and when your potential retirement date is going to be in the future. And it's going to strategically give you a batch of stocks that it's going to be more appropriate for a younger investor, and then it's going to automatically adjust over time to become more safe as you approach retirement age, okay? Now, I can say based on, I'm active duty 12 years in the military now, so I can honestly say that I've spoken to a lot of people who do this life cycle fund, and a couple things you got to be kind of careful of. If you're looking at outpacing the market or getting a little bit more aggressive with your investments, The life cycle fund is not for you, all right? It is for you, however, if you're willing to just put your money away and you not want to look at it and you want to, it's an actively managed fund for super low fees, and for that purpose alone, it can be really worth taking your money and just going ahead and putting it into the life cycle fund. It's honestly like putting your money on autopilot until you end up retiring, okay? It's extremely safe. It adjusts automatically, all right? And it's a pretty good option for those folks that really just want to not worry about what their pension is looking like, you know, day in and day out, and even year in and year out. It shouldn't matter to the passive investor in the life cycle fund because it's being managed, okay? You do not want to spread the life cycle funds out. You want to choose one life cycle fund and you want to put your dollars to work in that one life cycle fund. Don't choose multiple life cycle funds. You want to pick one and put them all in there, because the asset in and of itself is diversified amongst the life cycle fund, okay? All right, so the next thing that we need to talk about is really the nuts and bolts of the TSP, all right? The nuts and bolts of the TSP start with the G, the F, the C, S, and I. Now, for you guys that this is foreign to, or if you're invested in the TSP, you really need to listen up, guys, because if you're invested in the TSP and you don't know what I'm talking about with the G, F, C, S, and I fund, you really need to pay attention, and I would highly encourage you to pull up these funds and look at the historical performance over time, all right, guys? Now, remember when I talked about the importance of logging into your account and that 50% of active duty military never log into their account? There's a reason for that. If you don't log into your account and tell the TSP where you want your money to go, guys, it's going to default to the G fund. It's going to default to government-backed securities, which are like T-bonds, all right? It's going to go in here, and this is basically a fund that has no risk, okay? You're not going to lose money, but I can guarantee you, and I've spoken with people, I mean, I've spoken with chiefs who have met retirement age, and they've never done this, and they've had their funds going into the G fund for their entire career, guys. That's really, really sad. And I don't know why the Thrift Savings Plan does this. I've given reviews of the TSP and actually complained about this default option. I don't like it at all. I really think it should default to a money market, and then you should be prompted to go in there and allocate where you want. But this is just how they have it set up, guys. And if you do not log into that account, you run the risk of missing out on so much more in the future, because your dollars are being dollar cost averaged to basically a bond account, all right, or a government-backed security, okay? So that's the G fund. It is a good fund if you don't want to put anything to risk and you just want nominal gains over the future. It's basically guaranteed income within this fund, all right, but your rates of return are going to be relatively low, all right? Now, the next one is also one of the low risk funds that we talk about, and that's the F fund, and that is a bond fund. It's an indexed bond fund within the TSP, all right? Again, for you safe investors out there, or if you have a significant amount of money built up in your TSP and you've had it built up over time, all right, and you want to start shifting some money from the C, S, and I, then you can go ahead and pull from these funds and start working it back into the G and the F, because those are going to be your safe havens, all right? Those are going to be your safe haven index funds to put those dollars into, to go ahead and just protect them going forward. There's not going to be a lot of market fluctuation there, all right? Now, when we get into the C, S, and I fund, the C fund in and of itself is really the flagship account, all right? It's an index fund that covers the S&P 500. It really is my favorite account, all right? Now, for you younger investors out there, the C fund is where you want to live. If you're 18, 19, 20, early 20s, and you're in the military and you're watching this video right now, guys, this is where you should be for long-term investors. And I encourage you to go in there for every $100 that was invested back when this fund was incepted back in, I think, 1989, you've made close to $1,500 on that $100 increment, all right? Now, inflation over that time would have meant that those dollars were worth just a little over $216, I believe, is how that math works. So it's performed beautifully, all right? It gives you a year-over-year return of over 10% right now. That's the average right now is 10%, all right? You know, and we're winning the battle, guys, if we're doing 7 to 10%. And so this fund really does deliver for you guys. All right, so that's kind of why we throttle the young folks getting into the military, and we're so insistent on participating in the thrift savings plan. But you just gotta know where to put your eggs, all right? Now, when I keep talking about where to put your eggs, all right, this all happens within the platform, okay? When you get logged into this account, you're able to take your monthly contribution, okay, and you're able to take that monthly contribution and allocate that monthly contribution to say, I want X percentage into the G, X percentage into the F, and X percentage in the C, for example. Okay, so what I do specifically for my monthly allocation is I do 60% into the C fund, I do 20% into the S fund, all right, and I do 20% into the International Growth Fund, all right? That's just what I do now. That's my percentage of allocation, and it's really, really easy to get into the platform and set your percentages up to equal 100%, of course, right? But you know, if you wanted to get aggressive, you could do, you know, 80, 10, 10, whatever you're comfortable with by doing that, all right? But you have a little bit more latitude in your funds, especially these latter funds here, as opposed to the life cycle fund, which is more of a invest and forget about it, okay? Now, the S fund is the small cap fund. You can log in online and see the performance over time of the small cap fund. It's actually underperformed the market here within the previous years. I think it's only up year over year 4.5% since inception. And this was incepted in 2004, I believe, so early 2000s. So it's really not that old of a fund. So I'm actually looking to build that fund. And then the last one is your international exposure. All index funds, very safe, very diversified, and laughably, I mean, the fees on these accounts, guys, is really, really low. They are significantly lower than anything you'll get on the open market. And they're extremely competitive. I mean, you can find low-cost index fees, right? But we're talking specifically within the TSP account, okay? So when you get in here and you talk about saying, I want a percentage of my, let's say you invest 10% of your income into these funds, okay? Now you've got to tell that 10% of that 2-week allocation or every month allocation where those dollars are going to go first, okay? That's your monthly allocation, all right? Then you actually have to, once those funds build up, then you can actually allocate within that account. Maybe the C fund starts to really outperform and the market gets a little bit high. If you wanted to rotate some of that cash out of there, you could. It's very, very convenient, all right? And again, the key takeaway to this particular lesson when we're talking about the breakdown of funds, you see how there's not very many, guys? They made this very, very simple, cut and dry for people. And I used to think that this was kind of a problem. Like, I like the ability to buy single stocks. I mean, everybody who watches me knows I like that capability. But in the thrift savings plan, they actually really restrict you on the type of investment, but you can really get the bang for your buck if you just allocate these within these funds correctly and split up your money to make sure that it's going to it's making its maximum benefit basically. But the key takeaway is that if you do not log in, your dollars are going to go into the G fund as a default. Okay, got to remember that. That's a key takeaway. All right. Now, I mentioned the Roth IRA account. The Roth IRA account is something that I started in 2011. I started with, I think, a couple percentage of my pay, and I don't miss that, guys. You'd be amazed. You think you need 100% of your paycheck. You really don't. You're going to get some mental conditioning out of just saying, I'm going to start with, let's say, 2 or 3%. I think I started with maybe 5%, I think, of my pay is what I started. I'm significantly higher than that now. But starting with 5% back in 2011, here we are in 2017, that account's grown to 15 grand just by doing nothing, really, doing that monthly contribution. So, I'm pretty proud of that. We're starting our account, setting a good baseline, and this also helps complement some of my other accounts as well, okay? So the Roth R, okay, as the Roth stands for, is your Roth section of it, all right, and you've got your traditional. Now, a couple things I want to say about this. A lot of my legacy investors in the thrift savings plans are going to have traditional accounts from before the Roth R came out, all right? And unfortunately, you can't take this traditional and just do a rollover into your Roth R. It doesn't work that way. You would have to actually take proceeds from the traditional. I don't recommend that you do that. Keep those traditional funds in there. You've already received the tax benefit from contributing to the traditional. Remember when I talked about, breaking down your marginal tax rate and taking your benefit up front? That can actually be really good for you, all right? But I'm a real advocate of the Roth R, putting those post-tax dollars to work, and then they're eligible for withdrawal contributions and earnings going forward when you end up retiring. You can take those out of the Roth R with no tax whatsoever, all right? So I'm a big advocate of the Roth R. That's what I do. I've got a few dollars in the traditional because I started investing in the traditional a couple months before the Roth R came online back in 2011. And that's how I know when I called them and I said, I just want to take that few $100s and roll it into this account. The TSP customer service folks told me that that was not possible, okay? So certainly validate for yourself. If you're a 20-year investor here in the traditional, I'm fairly certain that you cannot go ahead and roll that into the Roth R account, all right? So now the big thing here is if you can tax protect in this Roth R account going forward, you can take these contributions and roll them into an individual retirement account of the Roth variety later on in life. So you can start to think of the possibilities there of actually, having a few $100,000 or $500,000 or $750,000 in this account, over the course of a military career, and then being able to roll that into your individual Roth or your self-managed Roth that I talk about all the time on this channel. All right, guys. So this is fairly new. This came online about 5 years ago, and they've always offered the traditional retirement account, guys. All right. So make sure that you explore both. I tend to gravitate toward the Roth R because I'm into tax protecting money. And again, to emphasize, when I retire in the future, I don't know what the future tax bracket is going to be. So I would just rather cap it at 0, okay? And protect those gains and protect those contributions going forward, okay? So those are the two types of accounts within the thrift savings plan. The last thing I want to talk about is the functionality to work an inter-fund transfer. This is a benefit to you guys if you do get into logging into the thrift savings plan. You can actually get in there and do inter-fund transfers. And what I mean by that, I kind of explained it earlier, is when you start to build accounts, or this account right here starts to accumulate wealth, right? And you start to get up into a higher figure. Let's say you've got 10, 15, 20, 25 grand in here because you've been max contributing to the C fund. You can actually come in here and take an inter-fund transfer, and you can actually take some of this money off of the C fund, and maybe you find that the S fund is a little more intriguing. Maybe it's underperforming and you feel like you want to have a little bit more risky exposure to the small cap or the international fund, and you want to go ahead and take some of these earnings and swap them out into the S, or you want to go ahead and protect some dollars and put it into the G fund or the fixed income fund, all right? It gives you that flexibility to do that. And it's actually really, really simple to do, guys, all right? So that's the functionality of the inter-fund transfer. But the secret is to be able to have full access to that account. And make sure you understand all the functionalities of the website. I will say in closing, Thrift has done a really, really good job of making their website extremely useful. All right, guys, But the fact of the matter is, and a lot of reason why I'm doing these videos, this will be a first of a long series of thrift savings plans for military member guys. I love you. All right, you guys are my shipmates. I'm putting this information out there for your benefit, guys, because what I said about the 50% statistic, that's alarming, guys. And I've spoken with people who have got to retirement age, and that is not the time that you want to find out that it would have been in your best interest to log into this account and make sure that all your ducks are in a row in these accounts, and making sure that your money is going toward the right account, all right? Because they will default you to the G fund. That's just a fact, okay, guys? You got to go in there and you got to fine tune that account a little bit, all right, guys? So listen, leave your comments at the bottom. If you're a military member out there and you've got specific questions for me regarding the thrift savings plan, hit me up in the bottom comment section. If you've had trials, tribulations, if you've had interesting goings on about the customer service within the thrift savings plan, I find them to be really good. Please leave those comments in the bottom. I think everybody benefits from reading through that commentary. If you have not subscribed to the Independent Investor channel, I encourage you to do so if you enjoyed the content and the sincerity of the message coming across. If you know anybody out there that is active duty or thinking about entering into military service, please share this link with them. It could be extremely beneficial if a couple things I've said, you know, can really hit home and help you guys understand how to allocate and how to get the maximum benefit out of the thrift savings plan, guys. Thank you so much for tuning in, guys. It's been a real pleasure. Good luck in your investment futures.